With inflation constantly threatening to erode purchasing power, protecting your money has never been more important. Today, you'll discover 8 foolproof tips to ensure your money holds its value in 2024. Let's get started. In 8th place, avoid leaving money in low-yield savings accounts. While it's common to keep money in savings accounts, these often offer interest rates that don't keep up with inflation, resulting in a loss of purchasing power. Instead, consider investing in options like Treasury inflation-protected securities, TIPS, or other fixed income securities that provide returns above the inflation rate. In 7th place, invest in real estate. Real estate has long been considered a solid hedge against inflation. Property values tend to rise with inflation, and rental income can provide a steady stream of cash flow that adjusts over time. Before investing, make sure to carefully assess the market conditions and location to maximize your returns. In 6th place, consider commodities. Investing in commodities like oil, natural gas, and agricultural products can be an effective way to hedge against inflation. As the prices of these goods rise with inflation, your investments can increase in value. You can invest in commodities directly or through ETFs and mutual funds that focus on this asset class. In 5th place, diversify with foreign currencies. One way to protect your assets from domestic inflation is by holding part of your investments in foreign currencies, particularly those from countries with lower inflation rates. This can be done through foreign currency accounts, forex trading, or international investments, providing a buffer against the erosion of the US dollar's value. In 4th place, invest in stocks. Stocks, particularly those of companies with strong pricing power, can offer protection against inflation. Companies that can pass on rising costs to consumers without sacrificing demand are well positioned to maintain profitability, which in turn supports their stock prices. Consider a diversified portfolio of stocks that includes sectors like consumer staples, healthcare, and energy. In 3rd place, hold some gold. Gold is traditionally viewed as a safe haven during periods of high inflation. It tends to hold its value and even appreciate when inflation is on the rise. You can invest in gold through physical bullion, gold ETFs, or mining stocks, providing a reliable store of value in uncertain economic times. In 2nd place, regularly review and adjust your investments. Inflation can change rapidly, so it's important to periodically review and adjust your investment portfolio to ensure it continues to protect your purchasing power. This might involve rebalancing your assets, shifting more into inflation-protected securities, or adjusting your exposure to different sectors based on the current economic outlook. In 1st place, invest in Treasury inflation-protected securities, TIPS. One of the most direct ways to protect your money from inflation is by investing in TIPS. These government-issued bonds are specifically designed to protect against inflation, as their principal value adjusts with changes in the Consumer Price Index, CPI. This ensures that your investment keeps pace with inflation, preserving your purchasing power over time. And for a bonus tip, always keep an emergency fund. Having accessible savings for unforeseen expenses prevents you from selling investments at inopportune times. If these tips helped you, subscribe to the channel, check out the video on the screen, and share this with others who are looking to protect their money. Let's continue this journey toward financial security together.